Okay, so that is a 1 hour chart. That is the correction that you're seeing. We have the same now on our live chart, but just to understand, the market of course stopped out in a 3. Now there was a 4, there was a 4, that was a 4A, that is a 4B. What you're seeing is 4C. There is no cause for alarm, except that's eating up on our profits. So if you were actually very profitable at 290 and this market did actually 295, now we're looking at 195, $100 down, and that is of course a waste of resource. But now it is too late to do anything about it. We want to, if you're already long, you want to hold that long, because if you close out now, you are closing out at the worst possible time, at the worst possible level. Wrong level, wrong time. So you just want to hold that position all the way back again to 295. You even gonna see a higher level. All right, there are many whales into this, and they're going, probably that is the news on it, they're going to take, this is really is the news on it, they're going to take it to 340. That's the projection. So of course there has been profit taking, definitely. Some of them may have closed at 250 and 260 and 290, but the projections still by most analysts that this resourced, I have resourced it, is that it is going to 340. So you don't want to close anywhere here. All right, what we're looking here on this chart, we were looking to buy at 231, as of 231 all the way down to 214. We believe now you should buy at 195 if you're not already long. So this is 195 here. This is really where we're going. This is an internal level 2 above that neckline, internal level 1, sorry, above that neckline, showing on the 1 hour chart. In order to envision this more, you are looking at this very small indentation. Of course, it's a very big correction, but this is a very volatile issue. We would only expect the cycle to bounce at the top of the old cycle level, A, here at A. If it breaks lower at the top of 1 takes you to something like 205 or 210. There's possibility to see an internal top of 196 and 200 and 195. All right, let's go market. We're still doing C. So again, if you close out now, you're at the worst possible time, worst possible level. You just have to hold that position because it's a good position. You're going to see again 295, that level here, and 322 and 340. I think at least 295. Why is this? Because we have an A that has finished. This is a B. All of this correction will bounce at top of a level 1 here, or internal level 1 inside. There really is no problem around the moving average. This is for our chart, and we will do level C. This is a big C here. That big C does an A, B, and the C, and usually that smaller C should be at least 161.8% of that B. So you're taking it to 340. We just want to be in at the right time and the right levels. That's what we're seeing now into that correction. See, this is live market, and you can see that the projections for this ending diagonal is all the way down to 188. Of course, we're looking at this entry here, 200. We're looking at the top of that level, 200, where we expect a bounce. All right, and we're looking at top of 1 here at exactly, that's right now where we're bouncing, 210. If you're not already in the market, only if you're not already in the market, you'd expect to buy 195 is an excellent buy. This level here, 199 and 200 net. I don't think you even get to see 195, sorry. So you want to buy 199, you want to buy 200. I think are excellent buys against top of level 1 here, top of level 1 here, $200. Only if you're not in the market. If you are in the market, you want to hold to 295 again. It will be seen. So I don't believe there is cause for alarm. All right. So also, if you want to join the market now, you would want to wait for confirmation. Of course, we're very close to the market bottom, so you may wish to divide your entry into 2. It's an opportunity now here at that point, because we just said that this is only going to do 200 and 205 and 203. So we're inside of that ending diagonal. We know that we want to buy this level, 195. We want to buy 200. This S4 and S2 when the market goes there. So we could consider to buy half size at these levels. 195, 200, even 203. if we get to see them, half size, and then the remainder we go on a confirmation. We know now what is a confirmation. We want to take a confirmation on the 5 and 15 minutes. On the 5 minutes, we want to see a degree 3. We all understand what is a degree 3. You must see, of course, positive momentum in the first place, and you must see an indentation into that positive momentum. So what is an indentation into positive momentum is that, okay, we're gonna see what we're looking upside down. You want on the positive side, you want to see a very strong spike up, and then when the market retracts, it will fall below overbought level. This here is oversold level, all right, and then bounce back above overbought level. Here it is bouncing back below oversold level. Okay, so we understand this is a degree 3 confirmation on 5-minute chart. We want to see it now bullish. Okay, so that's good. And we will have to, of course, picking a market bottom is a very patient matter. All right, we do not chase markets. It's a confirmation. Once we have it, we go in, and that's what we want to focus in, the profits, not just the profits, the rewards or the merits of going on a confirmation. So right now you're seeing a bounce, but there is no degree 3 momentum on the 5 minutes. Imagine or consider that if we get degree 3 momentum, this moves above overbought, falls back, bounces at 0, moves up again. Yes, price will be here, 225. But we know this is confirmed. We go, there will be a traction to 215. We buy 215. The stop is right here, 207. We are confirmed exact risk. So it's always better to go on the confirmation. This is the merit of it. But it is also good to buy the market low, half size, 203, if we get to see that. Because we are at the market bottom. But only half size again to be able to hold a strong hand. If we're already long, again, we are going to be seeing 295. There is no cause for alarm, and there is no cause to close out the position or go out in a premature manner, or go out if the market just moves to 240. We can still see these high levels again. Most probably we're going to be doing the same head, if not higher head. This is what we see coming up, so you do not want to consider to close now at all.